Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Monday, March the 4th. I hope everybody had a nice and relaxing weekend. Nice weather out here in the east, the northeast anyway. Back to the markets Friday. We did have a little bit of a turnaround on Friday. Markets were up ever so slightly. Dow up 35, NASDAQ up 6, and we had the S&P up 3.5. Kind of shrugged off the sequester, but we'll see what happens. Early in the week, I'm going to be really watching closely what the transports are going to be doing, as well as the VIX and the banks. It's going to be some good clues of some price action, what to expect in the next couple of weeks. I think that we are getting some volatility the last several days, but it's been spotty. However, what's going to happen in the next couple of weeks is going to really dictate where the trend's going to be. So if the bears are around, they're going to look to sell this market at these levels. They're going to really need to prove itself in price action, that we need to start breaking some pivotal lows. Otherwise, this market could actually start to rally again and at least test the 1550 and 1575, which would be the all-time high. So that's something to take into consideration. We do have quadruple witching coming out on the third Friday of this month anyway. So really keep an eye on what's happening with price and volatility. It's going to be interesting to see what happens. We have non-farm payrolls come out this Friday. We did not have it last Friday, although it is the first Friday of every month. The way they figure it out with with February coming into March, I don't know how they do it, but nonetheless, we did not get it on Friday. We are getting it this Friday, so that should be also interesting to see what type of payroll numbers we get. So, well, all of this is ready to start to digest. But real quick, let's go into the chart board. You can see for the week we actually had minimal gains. Definitely Russell here is lagging, as you can see. Brokers lagging, financials starting to lag a little bit as well. Retail picked up real nicely, and then we have our defensive names: healthcare, biotech, all up, utilities up. So really interesting, and I'm going to show some charts too, as well as the dollar. So let's go right into the into our sectors, and as you can see here, big move on the weakest: services, utilities, and healthcare. Not good if you want a risk on type mentality here. So that's not really interesting to see that all these safe haven sectors are starting to move money into, while the markets are still ticking at the high. So we'll see. We'll get some real good developments. Oil took a real hit. As you can see, gold recovered ever so slightly, and then we have our indices. Although we did have volatility, it did close up on the week, but again, it's real small. Let's take a look at our econ data, and as you can see here, ISM for today. For tomorrow, we have nothing for today, and the 6th we have factory orders, and initial jobless claims will be on Thursday, and then of course our non-farm payroll numbers coming out. All right, so let's go right into take a look at what I'm looking at here, and what I've been seeing is, and I've been mentioning copper for over a week now. Copper broke and closed below this large symmetrical triangle that's been forming here. So this is very disturbing if you are a bull. You do not want to see copper starting to break down. And that was basically that comment over a week ago, that Wednesday, that Thursday morning morning call email, when I mentioned how China is going to start to slow their construction in housing. And that's a pretty big statement coming out of the China government. So that's interesting, very interesting to see. And while copper reacting, take a look at the weekly chart. We are now at the lower end of this we actually broke through it. If you can't really see it here, but we broke through this lower trend line. So this is really disturbing if you are a bull. Copper needs to absolutely recuperate and start to break higher this week. Otherwise, if copper breaks down here on a closing basis, a weekly close, then there's a lot more room to run, as you can see, lower, and that will definitely hinder on any type of any type of move up in the markets as far as a risk on type mentality. All right, so now let's take a look at our NYMO. As you can see here, we're back below the back in the middle of the band. We broke below it. We bounced back up again. So now we're plenty of room to run back and forth. Really, this has been a non-existent indicator for the whole beginning of the year, actually. So we'll just have to take it one step at a time. Take a look at the new highs, new lows. As you can see here, how we've been making new highs as we were running up. Now we're not getting that, and as you can see here, we're starting to momentum is starting to really start to fade away. And when you see how we have lower highs, lower highs, lower highs, we're still above the zero line. However, we're not making new highs anymore. And that's interesting to show, and that's really when I saw this over the weekend, I wanted to point that out. That's very interesting to see. But we'll see. Again, price is what pays us. Let's take it one step at a time. NASI, we did have a sell signal on the 3 weeks ago. This is the third week now, on the close of the third week. So we did get it, and now we are on a full-fledged sell signal of the New York Stock Exchange Summation Index. So, and on the NASDAQ Summation Index as well. Okay, stocks above the 50-day moving average. This went on a sell signal last week. It's still on a sell signal. When you hit up these areas, we need to really get down below here before the markets give us a buy signal. Now, it could hang around here and then start to creep back up again. But again, we'll just have to take it one step at a time. But our indicators are starting to roll over and are giving sell signals. Same here, stocks above the 200-day moving average. All right, now, interesting to see the VIX, and I want to show you the VIX here. We did get the outside Bollinger Band I mentioned, and I said we were back in it, and that produced a buy signal to the markets, and we did get that little pop on Friday. So what are we looking at? I do think that VIX has a little bit more room to the upside, and obviously the 1928 will be a critical spot. 21.5, and then of course 23.23 will be the ultimate area here where the VIX would break out. I don't see the VIX breaking out above this area, but I do see fear creeping into the markets. We get a little bit of a pullback. S&P down to the 1450, 1470, and then of course we would need to reevaluate it. We don't want to get too far. But speaking of China, let's talk about emerging markets real quick, and I want to show you China. Emerging markets, and I made a nice bull flag which failed. Right, we broke out but failed. So it looks like the emerging markets here are in trouble as well. This is not a good sign to our markets, because we basically are in sync with one another, and if the emerging markets are starting to sell off, that's giving me a risk-off type feel. And take a look at China, the FXI. Look what happened here. Bear flag, broke down, sold off, came back up. So this also doesn't look too healthy as well. And this is the China ETF, the FXI. So a lot of signs that are saying that the markets are tired, and rightfully so. We do definitely need a little bit of a pullback here and a little bit of rest. Take a look at where the money's flowing. XLU, utility sector, breaking back higher. XLU versus the SPX, the ratio chart, obviously outperforming the S&P. And we're not even overbought yet on the stochastics and on the RSI. We're getting there, but money is flowing into it. As the markets are creeping higher, all of January and February, look what happened. We actually started rolling. And believe it or not, the XLU, the utility sector, has a lot more room to run to the upside. Okay? Take a look at healthcare. Same thing. If you can see it, very, very similar chart. Healthcare as well. Money flowing into the healthcare sector. And let's take a look at the consumer staples. Same thing. Very similar chart as well. Consumer staples moving in as is the dollar. And I wanted to show you the dollar. If I have the dollars, let me just double check here. Nope, I'm sorry, guys. I don't have the dollar. But the dollar was making some new highs as well. And that's something that we're going to really keep an eye on. Because if the dollar starts to make new highs, that's going to hinder on risk coming off the markets as well. And another sector, since we're talking about the dollar, keep an eye on these high-yielding currencies, the Aussie dollar, New Zealand dollar, and the Canadian dollar. They're really starting to lose a little bit of momentum here, and that's interesting to see where we are in the equity markets as well. So that's really, even if you don't trade them, it's definitely interesting to look at. All right, let's take a look at our, going through our charts, S&P and the ATR, and as you can see here, we have volatility start to creep back in the markets. And when you have all of these little pinned, little small candle, you'll see there's no volatility. And then we have a couple a little bit here, 2-3 days, and then markets get back up. And sure enough, we had it for a couple of days. We really haven't had much volatility. As you can see, we had a down day, an up day, a down day, and that reversal. And that's really much it. And if you can see these indecision candles we have here, a reversal candle, indecision candle. And then this is telling me that when you have a pickup in volatility, the markets are nearing a tradable top. All right? Take a look at the weekly chart of the SPY. Again, indecision candles are the upper end of the range. That does not mean that the markets are in a sell signal as of yet, but volatility is picking up. That is a good sign. Big distribution week we had, and although the markets did manage to eke out some gains, we did get some selling coming in at these levels. That means that the sellers are enticed to come out and sell at these levels. So I think it's going to be a really hard spot to break out of. But once it does, if the market can break out of these areas, then I definitely think a 1550 to a 1575 test will be probably in the cards in the near future. But right now, I don't think that's going to happen. As you can see here, look at these large engulfing candles that we have. We did manage to take back most of the candle, if not all of it, and now we're sitting here. So right now, Monday morning, S&P, early Monday morning, S&P is down. The E-minis are down 4.5 to about 5 handles in the market. So we'll see if this can manage to hold, and then we start to push lower again. Again, Fridays are really generally weird. Usually we get this slow grind higher on low volatility. After 11:30, usually the day's done. Spiders, I'm still looking at this area here, 150, 150, 149.80, and then 147.20. These are the areas that I'm still looking at. They're still valid, just to give you an FYI. And then, of course, the Spider 30-minute Bollinger Band starting to creep back in again here. So R1 is going to be a level for the top side. 152.91 will be the upside resistance area. Here's the weekly chart. Same thing as the spiders, as you can see here. Multiple indecision candles. So where do we go from here? Price is going to let us tell us where to go in the markets. And we can see here on the daily chart, we're still holding these areas, 1495. I'm still looking for 1475 first target, and then, of course, the 1450-ish area right in here. That would give me that area, that little fill-in, if you can see that little volume zone. Once we break from here, that should really send us right back down to the 1450-ish area. Okay, and then 60-minute, and this is the bearish rising wedge. And right here, as you can see, where I'm looking at 61.8% to the 50% retracement. So 1465, 1450, these are going to be my downside targets. And then, of course, we would reevaluate. Transportation's doing quite well. We're actually holding in while we are unwinding our overbought readings in our indicators, MACD and stochastic. So that's another good sign. So we'll need to see what the transports do in the coming days and weeks, because if they start to really break down and start to take back this reversal candle, then I do think that the markets will follow suit. Same here with the IWMs. Now, as you know, the IWMs were a lagger to the other 4 indices that we follow. However, did manage to recover nicely off this big down day that we had. Same thing with the diamonds. Diamonds actually acting really quite strong here, as you can see here. And let's take a look at XLF. Here's the banking ETF. I like to watch this because I do think that a lot of these cuts that are going to be implemented in September are going to affect the banks. So not saying that the banks are short as of now, but I would be looking in the coming days and weeks to a break below the 1730. And then, of course, the ultimate break below 1715, call it, which would be the 50-day moving average, would get us down at least to fill the gap at 1640. So XLF is going to be on my radar for the coming days and weeks as well. Apple. Take a look at Apple, last few charts here. Apple looks horrible, and I kept mentioning to everybody, we did have the annual meeting in Apple, nothing new to say, and sure enough, Apple now is breaking down. Like I said, if you're not trading it, stay away. I would not be looking to build any positions. I think Apple will ultimately see its 200-day moving average come down here. Now, don't forget, the 200-day moving average does continue to creep up day by day. But I think you're going to see 1360, 1365. Here's my comments down here. 1420 break, you probably get that 1360-ish area. I'm going to redo that from that 1352, which was here. So now the 200 days creeping up. But again, guys, Apple looks really ill. Let the market flush itself out before looking to build any type of long-term position in this thing. Otherwise, it's just dead money if you're not day trading it. Qs, lastly, weekly, same thing. Really, not just much has happened in the last coming. Oh God, actually the beginning of the year, we haven't really had much of movement in the retail, in the excuse me, in the technology sector. And as you can see here, we're literally in the sideways channel. This is a sector that we're going to look to watch in the coming months. I still think it needs a lot more work. It needs to prove itself that it wants to go higher. All right, guys, I hope this video helped out and get you prepared for the week. Obviously, as always, we'll have our video out first thing tomorrow morning with another recap of the markets. Have a great day. Be safe out there, and we'll talk to you tomorrow.